Hello everyone, it's Melinda Jennison here from Streamline Property Buyers. I'm going to be demonstrating to you all of the latest data here in Brisbane to help you understand what's really happening in terms of the Brisbane property market. So let's begin. First of all, just a market snapshot. I've got listing volumes reported by CoreLogic over the month of April. New listings are down 22.5%. The average auction clearance rates, according to Domain, 62% across the month. There is high buyer activity throughout Brisbane, especially in the inner city precincts. You've got house values that increased 0.2% throughout April, so back on the positive trajectory. And we've got unit values that grew 0.9%, again, positive trajectory, and this is according to CoreLogic data. Gross yields for all dwellings sitting at 4.4%. Now, in relation to listings, listing volumes are low. In Brisbane, the total new listings are down 22.5%. So that's a further decline compared to March. And we've got the total listings for the 12-month period also slightly down. When we compare that to sales volumes, you'll see that sales volumes have also declined in Brisbane across the month, 22.3% decline compared to the same period 12 months ago. So the decrease in sales is proportional to the decline in new listings. So that indicates that properties that are being listed for sale are finding buyers in the current market. Obviously, in terms of the total listing volumes that we do have, when we look at SQM research, we're still about 30% below the long-term average of listings here in Brisbane. So we do really have a supply shortage. Now, during April, you may be aware that the Queensland Government also introduced changes to the frequency in which landlords can change rents on their investment properties. So as of the 1st of July, a leaseor is not permitted to increase rent in a new lease if it was increased less than 12 months ago. So basically, rental price increases that are more frequent than 12 months are no longer permitted here in Queensland. But when we look at the graph here, which is a graph issued by the RBA, we can see that just over 70% of all rental properties have lease agreements of 12 months or longer. So we do not see the new legislation as a likely impact for the majority of investors, but it's something that provides a further disincentive. And of course, there's been plenty of those over recent months, especially here in Queensland. In terms of buyer demand, we have been seeing since the beginning of 2023 that demand is increasing. And there's a few ways that we can monitor that through the data as well. So auction clearance rates, you can see there in March, according to Domain, the average auction clearance rates across all weeks in March was 53%. That jumped to 62% in April. And we're definitely seeing demand outstripping supply across most properties, especially in the Brisbane City Council precinct. Most quality properties are demanding multiple offers or multiple registered bidders at auction. So fundamentally, it is putting upward pressure on prices because there is an imbalance between supply and demand. Now, additionally, we do have some strong economic indicators here in Queensland. You may have heard the State of States report issued by CommSec reported that Queensland is in equal second place according to all states or compared to all states around Australia. Relative population growth is still putting Queensland on the leaderboard. The only weakness that we have is in relation to construction work done. Now, you'll recall in relation to property, a decline in construction means a decline in supply. So when we relate that back to the property market, these are all indicators that show that there's going to be a floor on the amount of supply that can actually come through because we're not building enough properties and yet the demand is strong. So Queensland performing very well on the economic front. So let's have a look at CoreLogic data in terms of dwelling values across the month of April. You'll see their dwelling values have increased. So 0.3% growth overall in dwelling values. It's also resulted in a turnaround in the quarterly growth. So we're back in positive territory there over the last 3 months with 0.1% growth. For a Brisbane dwelling, right now you'll be paying $6,945,000 more than you would have been just 1 month ago. So that relates to the monthly growth based on the median value. We can also look at the monthly growth based on PropTrack data. Again, two data houses should report exactly the same, but the numbers do come in a little bit differently for each data house. We've got here 0.14% growth in dwelling values according to that PropTrack data as well. Now, we can also look at price segmentation data for all dwellings from CoreLogic. This is up to the end of March 2023, and it does still show that for Brisbane, the bottom 25% of property values are outperforming the higher value properties. So in the first quarter of 2023, the lowest 25% of property values showed a decline in values of only 0.6% compared to the top 25% of values, which showed a decline of negative 2.1%. Now, we need to be careful relying on this across the board and assuming that all higher value properties have declined more than lower value properties, because this is dwellings data. And one explanation for this is that the unit market has been outperforming the housing market, and typically units are filtered in the lower price segments. So there can be some compositional bias in terms of what this data is showing, and that's important for anyone that's relying on this sort of information to be aware of. And of course, it's something that we're always highlighting when we are communicating this information to our clients. Now let's have a look at house values. According to CoreLogic, we've seen an increase across the month of April of 0.2% in house prices. This is actually also showing that the quarterly growth across the last 3 months for Brisbane houses is still very slightly down at only negative 0.1%. But if we look at just the monthly growth of 0.2% based on the median, a buyer would be paying $9,861 more today than they would have been just 1 month ago. So that helps to quantify that very small, but there is a real figure there in terms of the growth that has been achieved. In terms of PropTrack data, again, positive growth 0.17%. So both data houses tracking the same sort of information there. When we look at unit values, in Brisbane, unit values have again outperformed house values according to the CoreLogic data. So we've seen unit price growth of 0.9% across the month of April, and that's demonstrating 1.1% growth across the quarter. So this has been a consistent trend that we've seen for nearly 12 months now, where the unit market has outperformed the housing market, potentially because of that shift towards more affordable dwelling types. Now, if we look at the amount that the unit market has moved across the month, we're now looking at $5,959 more today than just 1 month ago to purchase a unit at that median value. PropTrack data shows something that's a little different, shows that median unit values detracted or fell away 0.02% across the month. So again, very uncertain as to why the different data houses are reporting something different, but this is important for us to understand, and then of course overlay this with on-the-ground observations. Let's have a look at market rents. Now, you may be aware vacancy rates in Brisbane are still at historical lows. Up to March, vacancy rates are sitting at 0.9% citywide, but of course, when we look suburb level, we've got some suburbs that have extremely low vacancies, less than 0.2 or 0.1%. In terms of house rent growth and unit rent growth, in the housing market, we've seen rents increase 10.3% over the last 12 months. Now, that rate of price growth has been slowing for the last few months, but it is still on the rise. In terms of unit rents in Brisbane, they've increased 16.5%. Now, the magnitude of that growth continues to escalate, again, potentially due to that shift to a more affordable option from tenants. Of course, the level of escalation in rents across both segments of the market has exceeded the rate of inflation, and we all know inflation has been high. So this is definitely putting a lot more stress on tenants, especially those who are having to find the additional income to cover their cost of living. Not all tenants will be impacted in the same way. Of course, it will depend on the income that they are earning, but this is a problem that will continue in Brisbane simply because a lack of supply. So just to summarise the market here in Brisbane across the month, look, the market looks bright for property owners that already own property, but it's not so bright for renters because we do see that upward pressure on rents continuing. We seem to have passed the bottom of the downturn. Over the last 2 to 3 months, we've seen those property prices for both the housing segment of the market and the unit segment of the market turn around. We do not see a boom in sight, certainly not in the foreseeable future, but we do see more normal or more stable market growth predicted, and it's simply due to the imbalance between the supply of properties, because we have low listing volumes, and also that demand that appears to be picking up month on month. If you'd like to connect with us, we provide a regular monthly blog on the Streamline Property Buyers website. We also have a very high following on Instagram. You're welcome to connect with us to follow our content. Brisbane Property Podcast is released one episode every week. If you're interested in Brisbane property, please subscribe to our podcast. We put a lot of time and effort into ensuring that we provide quality content for our listeners. Finally, once a quarter, we run a live event online. It's the Brisbane Property Panel, where we do invite special guests to come through and talk about a relevant topic specific to the Brisbane market. So keep an eye on updates in relation to the Brisbane Property Panel. We look forward to speaking with you again next month. Bye for now.